Welcome back. We're here at the New York Stock Exchange. Investing in stocks and bonds can be intimidating for some, but Dail St, president of Williams Capital Management, is here to help us break through those barriers. Dail, how do we get started?
First, before you get started, you got to make sure your house is in order. If you are paying down debt in double digits, whether it's credit card or anything else, that is probably better to pare that down before actually investing. So I must say that first. In terms of getting started, if you're just getting started, mutual funds is absolutely the best vehicle. Minimums range from 100 to 1,000, and there's lots of tools of how to begin investing in mutual funds. We can talk about that in another segment, but the main thing is asset allocation.
And you said with mutual funds, investments begin at $100. Is it realistic if I really only have $100 to invest, or $500 or even $1,000 to go ahead and do it?
If you invest $100 a month for 18 years, assuming an 8% annual rate of return, that equals $48,000. It is always important to start with whatever you have if you're ready to invest.
Now, one of people's greatest concerns, of course, is it's great if the money goes up, it's a nightmare if it goes down. Are there ways to safeguard my investments?
Well, the best way in terms of addressing the money goes up and down is frankly dollar cost averaging. And that way and that really means investing all the time. When stocks are quote unquote cheap, when stocks are quote unquote expensive, because let's face it, nobody can predict when they're cheap or expensive. But if you're consistently investing all the time and sticking to your plan, you will ultimately have a portfolio that's going to work for you and your family.
What are the lessons that the average investor should have taken away from this most recent credit crisis?
Emergency funds. Emergency funds, 6 to 9 months of living expenses is critical, and the investment goal in an emergency fund, in my opinion, should be capital preservation. So your goals for capital preservation is very different than your goals for investing for retirement, as an example.
You know, I think part of what intimidates people is that there's so much information constantly being thrown at them about the markets, what they're doing, what's safe, what's not. What are, in your opinion, the most dependable resources, the go-to places where people know they're getting not the pundits' read on what's happening, not somebody with a separate agenda's read, but really the truth about what makes sense for them and what doesn't?
I think Morningstar and I think Vanguard have great tools for new investor or young investors to really start to think about your asset allocation. It measures your risk tolerance and gives you specific suggestions about how to get started on your investment portfolio.
What's your best advice, specifically to African Americans who are in the market and concerned, or who are really on the verge of getting into the market and are hesitant?
Anytime you're afraid of anything, rule of thumb, write down all your fears. Just do a purge. Write it down, share it with people, talk to your family, friends. Just get it all out there. Because at the end of the day, the only thing that's stopping you from investing is yourself.
Right.
And if we get and actually focus on an asset allocation for ourselves and our family and know what our investment goals are, that's the absolute #1 way to start. Our emergency fund aside, asset allocation is the key, and sticking to it.
Dail, that was great information. Thank you so much.
My pleasure. Thank you.
For more information on the fundamentals of investing, go to blackenterprise.com. And if you have any questions or comments about personal finance, hit us up on Facebook or Twitter. After the break,
an entrepreneur of the week who gives her products away for free to actually grow her business. Stay with us.